Hello fellow option traders, this is Jeff and this is the weekly update for Friday, the week ending Friday, April 22nd, 2016. And I apologize for not doing one last week, but I was just not here on Friday and I couldn't squeeze one in before. It's been pretty busy. If the weather's nice, I'm probably out doing something. And at this point in my life, I'm just really happy that I am able to do that. Alright, so the market's been pretty much in a bullish mode lately, but if you look at some of these announcements that came out this week, they don't really look all that good. For instance, this is the housing market index. Right at the bottom of the range. Consensus was 58 to 60 and it was actually 58. Look at housing starts. They were looking for 1.12 and they only got 1.089. And existing home sales, though, that looked pretty well. It didn't look too bad. Definitely improved over this time last year. Or last month, but last year it's down a little bit. Jobless claims, I guess that number was probably pretty good. 200, that's 0.1% of the workforce every week is losing their job. And everybody says, oh, that's so great. Yeah. But look at unemployment. Yeah, maybe we don't believe that number. This is a biggie right here. Philly Fed Business Outlook Survey. They are expecting 9 or a range of 5 to 15. They got minus 1.6. The market shrugged it off yesterday, pretty much. And today, PMI Manufacturing Index, they're expecting this range, 51.5 to 52, and they got 50.8. So, other than government numbers, everything is looking like there's a huge slowdown. Alright, I'm not going to look at other markets. Let's just jump right over. I'm just going to close that out. Let's take a look at what's going on today. Today, the Dow is down 0.2%. S&P 500 is down 0.35%, and the NASDAQ is taking a big hit, and we'll take a look why. Almost down 2%, but the Russell, dang that Russell, you know, it's killing me here, man. It's just it's showing some strength, and typically the Russell is where you go to look to see where things are going to be moving in the future, sometime in the future. It could be a month out or whatever, or a year out. VIX is at 13.95, actually flat. Well, I don't think it moves till the end of the day. So the VIVIX is down a little bit for today. Gold is at 1232, took a big hit today. I don't know much about bonds, so I'm not going to make any comment. Oil's at 43.55, climbing lately, as of late. Dollar's at 95.15 and a half, climbing as of late, at least today. Alright, so let's take a look at what's going on with the NASDAQ. Well, look here at Amazon, Baidu, Chipotle. They're all more than 2%. Google, before when I looked at it, it was over 6%, so here we are at about 6% down for the day. And the rest of the NASDAQ, at least that are on my A+ list, are not looking very healthy at all, except for a few. Alright, so we're going to take a look at the Russell positions in a minute, but first of all I wanted to go and take a look at gold covered call that I have. GLD is right now at 117.60. So right there it says 117.60. Our call's at 119 and it expires in June. Everything is humming along just fine with that particular trade. If we went to the, I don't think the risk profile is not going to tell us anything. But if we went to take a look at, if we wanted to, we got Ford up here. How do we end up with Ford? GLD. All right. Okay, moving right along. June. Here is our position right here. It's worth $2.51. I'm just not going to do anything with it. The extrinsic value is, I could move this over here. Extrinsic value is actually $2.52.5. So really, I'm not going to give that up because I would be giving that back to the market. So I'm hanging on to this. It's out of the money, so there's no real reason to be in any sort of a panic on that at all. And then also I have a just a straight, if we went back to the monitor tab, I just have a straight gold 119 call, expires in January of next year. I'm looking to see gold make a big climb, but so far it's not been cooperating, so we're at minus $230, but I'm patient. I will wait. Yes, on that particular one. NAVB, speculative stock, has been making some nice moves lately. We can take a look at a chart here. Just right quick. Oop. NAVB, if I could spell. I guess I'm getting too old to spell even. So this 20-month moving average up here is starting to come up to it, and we look like we're kind of in a little bit of a move. So I bought some at $1.62 and I bought some at $2.58. So we're just waiting for that to happen, I guess you might say. Speculative stock. I think I sold some back here. Anyway, that is that particular position. And then we have a simulated covered call on Ford. And it's right down here where we bought the stock at $13.63. We're currently short the June 12.75. The current price of Ford is at $13.53, so it's in the money. And we're going to have to do something, and I'm going to tell you the reason why. First, let's go take a look at the spreadsheet. Here is the Ford tab. And I already posted the dividend in here on 427. The dividend's going to be 15 cents or $15 because I have 100 shares. And I think I'm going to have to do something about that 1275, and here's the reason why. Coming back over here, over to the Analyze tab, let's take a look at the extrinsic value of that June 1275. Here it is right here, 1275. The extrinsic value is actually 14.5 cents. So if it kind of hangs out around there, and maybe it's different by a penny, or to the advantage of the holder of the long call, he's going to want to exercise it if the extrinsic is greater than the dividend by a penny, by 2 pennies, by 3 pennies. Because what happens is a lot of these places have a huge amount of long calls, and they just exercise them all, and there's a good possibility that you could get hit. So I'm going to want to roll this. So if I want to buy it back, it's going to cost me 95 cents. So let's just go ahead and click on the ask price, and we get a simulated order down here, and it's going to cost me 95 cents to buy that back. And I think the prudent thing to do would be to roll it to a July 13. So if I go ahead and sell that, that's going to be 84 cents. So I'm going to take an 11-cent hit on this just to keep myself safe into July. So I think that that is what I'm going to do. So I'm going to go ahead and lock these in at that, and then I'm going to jump back over here, and what are we doing here? We're rolling for a net debit of 11 cents. So I'm going to go ahead and insert a row here. And then I'm going to want to, where do I have formulas? Here, here, and here. So I'm going to just copy these formulas down here. Okay, and then today's the 22nd. And I'm rolling. June 16, 12.75 to, how do I do these here? No, that's what, here's what I want to do. To June 16, sell, and am I making these two lines? Is that what I'm doing? Yeah. So I'm buying. Buy June 16, 12.75, and then I need another line. I know, I see that. I'll correct it. And you guys are pretty sharp. This is July. So I'm just going to copy this down to there, and I'm going to say sell July 16, 13.00. I did that on 422. Okay, so we're looking at a negative 0.95 and a positive 0.84. So negative and a positive 0.84. Actually, I need to put that in bigger numbers. So that's a negative 95, and this is 84. Okay, and then let's copy. Control C, Control V, and this is now 13. And there also is a formula here. Okay. So we're not really all that bad off. Not that bad off at all. Why is that saying that something is different there? Yeah, that could be. Okay. What's wrong here? Why is that showing up there? I'll figure it out later. I don't want to waste your time on this. We're already almost at the 15-minute mark. So that's what I did with that. So I rolled forward. And I'm leaving GLD alone, both the GLDs. Go back to the monitor tab and let's take a look at the Russell. Okay, so yesterday I was looking at this. I'm thinking, you know, take a look at the chart here. We have this. Bull put down here, way down. Oops, at, let's go to RUT. Excuse me. Let's go to the big chart. Here's the big chart. Okay, I'm on a daily chart here on a big chart, and I have this 970 bear call. So why don't I roll that up to something and collect a little credit while we're waiting for this expiration to come up next month. So it's a May expiration, and it looks like this. Actually, there's only one left because I put the order in yesterday, put it good till canceled, and 2 of them executed today and 1 did not. So I'm still waiting for this one to execute. So we're at 970, 950. Here's the order down here. It's at 15 cents. Don't know why it hasn't executed yet, because actually we're looking at 13 cents now, so I don't understand why this is not executing. Here's my simulated buyback of that. So I'm willing to buy it back for 15 cents, but it's not executing. I don't understand it. And I don't want to, I would like to roll. Here's what I would like to do is roll up to a 1050 and get an 82-cent credit on that for a net of, well, now it's 80 cents, for a net of 65 cents on that, which would help me a little bit if we don't get to where we need to be with this 1100 call here. So looking at the chart, you can see that we're way in the money on this. We're at it's looking at 1142 right now. We're looking at 1100 down here. We need to be in this gray area to be profitable, but we got time, baby. We got time. Here's a trend line that I had in here. It's also riding above the 20-month average. It actually moved above it quite a while ago. So that's what, no, this is 20, that's not the 20-month. Okay, that's my fault, because this is supposed to be a monthly chart. Let's go to the monthly. Alright, so it's still below the 20-month moving average, which is our key. Here's this resistance line, or what was resistance, for a trend line. And looks like it may have broken above that, at least temporarily. So we may have to tweak that line a little bit. Boy, I was sure it was looking good before. But if we would put it on the closing numbers, for instance, right here is the closing number, right at the top of that, or actually the open number. We want to activate this drawing, and we could just kind of like tweak it like that, and tweak it like that. So, you know, we just, us technical traders just tweak things around to make it look like we're so smart, right? So here's this downward trending resistance line, still acting as resistance now that I've adjusted it. It's great how that works, isn't it? Still thinking that this is going to pop back down into the gray area. How much time do we have? We'll go back over here and take a look at, we don't have expiration in here. I can't see it. We have 3 weeks. I think it's 3 weeks to expiration. Let's go to a nice little calendar here. Okay, so we're way back. We got 1, 2, 3, 4 weeks to expiration. I'm not worried about it. I'm just not worried about it. And I am prepared to take the whole loss. I just wish that I could get this stupid order to execute so I could do these, because I want to keep all 3 accounts consistent. So I want to get in there. I'm already losing 3 cents on this, probably because Russell looks like it might be kind of making a big move today to finish the day out. We want to go for an intraday. Let's do a 30-minute. No, it's not quite at its high for today. It's still down a little bit. But that's what I wanted to do. Not able to do it. Maybe later today this order will execute. Maybe I'll go in there and try to figure out why it's not executing. It should have. I mean, it's almost at the natural price now, so it should execute. Alright, so that's where we're at. It's kind of a crazy looking situation here with this Russell, but I am totally confident that there's a good chance. Let's take a look at the analyze. Let's take a look here. There's one standard deviation still puts it out of the money, even at this price, at this current price. Of course, if the price moves back down here, then this shaded area is going to get wider because IV is going to be increasing. But if price moves up, then the shaded area is going to get a little bit more narrow. Now, this is where we're at as far as the loss is concerned right now. Approximately 15, well, it says 1580 here on this side of it. So that's why I want to try to collect some credit down here with these guys. I want to tighten up, I guess you might say, the spread here, the Iron Condor. So that would put it at, going back to the monthly, the monthly chart, we'll switch it back to a daily chart. That 1050 is right here. So, I mean, that keeps us above the low for the last couple of months. So that should be a pretty safe thing to do, I think. And if we look at the risk profile, 1050 is right about here, right there, and that also is well away from one standard deviation at the current price, so that should be a relatively safe thing to do, and the Russell appears to be on the march. So that's it for today. That's it for the market update. I haven't really looked at any other charts. You know me, I'm just hung up on the Russell. I don't want to confuse things, at least for me. I just stick with the Russell and get to know it better as time goes on. Alright, so that's it. Thank you very much for watching. I hope everybody has a really good weekend, and well, I just hope everybody has a good weekend. I don't want to bring any politics or anything into it. Just enjoy your weekend, your family, your friends, and your community. Have a great day, and happy trading.